Hey everyone, and welcome back to another episode of The Negotiation. In this episode, we bring back our good friend Jacob Cooke, co-founder of WPIC Marketing and Technologies, to gain an up-to-the-minute understanding of how well China is economically recovering from COVID and what consumer trends to keep an eye on as he is now back on the ground in Beijing. We discuss why a work-from-home culture is unlikely to be a part of China's future, how consumer trends have evolved over the last 18 months, what to expect from the 618 shopping bonanza this year, the development of the live streaming LiveCommerce craze, how the IPO of Alibaba's logistics division will impact consumer behavior, among others, and how the Biden administration is doing so far with regards to the U.S China trade war. Enjoy.
Salaries are rising across the board quite fast. Companies are digitizing, and that's all going to lead to some of the highest GMV growth that's forecasted in recent history. There still is a lot of globalization too. So we're also hearing about big expected numbers in the United States with all the stimulus. Well, a lot of that is going to end up in China as well. So there's going to be increased factory orders. So we're really actually expecting one of the best years in recent history.
Home to over 4 billion people, the Asia-Pacific region boasts one of the most powerful consumer markets on the planet. Not only is it home to half the world's under 30 population, but it's also home to more than half the world's internet users. It's a market no globally minded brand should ignore, but entering markets like China is no easy task. Just ask the likes of Microsoft, Google, Uber, and Facebook. Times are changing, and with the right partners, doors are slowly opening as more and more companies find success expanding into the markets of the Middle Kingdom. I myself spent 8 years in China, mostly as a venture capitalist, helping early-stage tech companies enter the Asia-Pacific market successfully. This show is dedicated to uncovering and examining successful China entry and growth strategies by interviewing the people behind those success stories. My name is Todd Embley, and welcome to The Negotiation, brought to you by WPIC Marketing and Technologies. Jacob, welcome back to the show. Good to have you.
Thanks for having me, Todd. Great to be back.
Okay, so why don't we start by diving into the latest in China? What are you seeing in terms of COVID lockdowns? Is the country fully back to normal? Bring us up to speed for those who are not in the market there.
Yeah, it's getting pretty much back to normal. Domestic travel has been restored. You're now seeing flight delays for air traffic control again, which is, in a way, it's almost nice to have it back because that really tells you things are back to normal. There's been some sporadic cases in different parts of the country. I believe Shenyang right now had a few cases, so there's a little bit of travel restricted up there, but nothing too bad. I think it's been pretty much 6 months now that things have been very stable. They've upped the quarantine on coming into the country, so the international borders are essentially still closed. But other than that, reasonably back to normal. We're getting ready for 618 here now, so things are getting pretty busy.
Now, we know the vaccine rollout in the U.S. has been pretty amazing. We know the vaccine rollout in Canada has been pretty not amazing. What's the vaccine rollout been like over in China?
It's been pretty good. I think most people who have wanted it have been able to get it. I believe that Beijing and some of the big cities are now getting to that 60% mark. And it's been very available for anybody who's wanted it. I believe I got mine back in late March. And we're getting the full 2-shot regimen within 2 weeks of each other, as you should be. So lines aren't very long. It's relatively straightforward to go and get. And I think it's free too as well.
What about returnees, especially a lot of the foreign, the expats, brand owners, business owners, everybody who does business, lives in China? Have they also been able to return from abroad back into China?
No. In a lot of cases, they haven't been able to. There's still a ton of restrictions on international travel. And, even if you are lucky enough to get processed and get your visa, you are still going to be subject to a 3-week quarantine now, which has gone up. The latest I've also seen is flights have been reduced in between the countries. So it's not open, and you never really know, with the rumors that you hear. But what we've been hearing and sort of coming from the Olympic organizers, that there's going to be no change to that until after the Winter Olympics next February.
Oh, wow. That long. That's incredible. We're seeing a lot of work from home. There has been, a lot of attempts to tie oddities in the market to work from home, whether it's live audio stuff like Clubhouse, the housing market, used vehicle market, all kinds of oddities and things going on, not to mention fun stuff like the rise and fall of Bitcoin and NFTs and all the rest. What about work from home country? Is that now a thing? I mean, you're not staying back in Canada, you're back in China, but are you seeing a lot of people who used to live and work from within China now maybe starting to think about a transition of where they manage all their China operations outside China?
I was certainly in Canada for a large portion of 2020. And, just with time zones, it's pretty rough, quite frankly. A lot of nights you're working till 1 or 2 o'clock in the morning. So I don't see that anybody doing that. And I've never been a real huge fan of work at home. I think you lose a lot in the collaboration between your team members. I think you lose a lot in terms of the relationship building, the creativity, those moments of brilliance that you get from just working together. Not to mention all the team building, et cetera, relationships, So I don't see work at home being a thing here in China. And I think that also, being such a large country with such a, huge population, most people, like not 99%, live in apartments. And in a lot of cases, there's a lot of family members, people, even when they have their own kids, do end up living with their parents or in-laws, et cetera. So work at home can be not very comfortable as it might be, in America, where people are moving from the cities into the suburbs into great, big, huge homes where they've been able to carve out, a portion of their houses into home offices. And quite frankly, it can be more comfortable even than the office that they have at work. That's not quite the case here. So I don't see that being a thing. And then due to the time zones, I don't see the people that are trying to run businesses here and try to do that from the US. I don't think that that's sustainable on the long term. And especially with us, we're hiring, 20, 25 people a month. That's really tough to do remotely. So I think it's going to be a little bit different. And from what we're seeing too, office space and office rents are continuing to climb. We just cut the ribbon on our Hangzhou facility a couple of weeks ago. And, we were looking for places there for a couple of months. And, we'd finish the day, we'd decide on a place, we'd, show up there at 9 o'clock the next morning to sign the deal, and somebody would have showed up at 7 and took those places right from under us. And this was happening all over the place. And the place that we did get, we finally, the local government felt sorry for us and introduced us to a building that wasn't even on the market yet. So we were literally the first tenant to move in there before even the lobby was finished. And that's what we had to do to get into Hangzhou. So that really tells you that the trend of work at home, I think, is not it's not catching on and probably isn't going to be a thing here.
You've been around the country, obviously, head office in Beijing. You've got the campus in Nanjing. You've got now the Hangzhou campus. You're kind of traveling around, managing a lot of operations there. Are you seeing still a lot of masks, social distancing? Is it something of a norm in China? Will it stay something of a norm over the next 12 months? Or has that time, thankfully, come and gone?
Well, what's actually really interesting is those three cities, it's different. So in Beijing, it's 100% masked up. People wear masks everywhere, all the time, even on the street. When we go into Hangzhou, hardly anybody's wearing a mask. And Nanjing, I would say it's about 50%. Social distancing, I don't think ever was really a thing here. It's kind of hard when you've got, a billion plus people. But the mask wearing is definitely still a thing. You might remember when you lived here too, right? It wasn't such a behavioral shift as it was in the United States because people were used to wearing the pollution masks. So this wasn't a huge shift in behavior, but it's just different in different parts of the country. It's been really interesting to see that.
What about consumers and their focus, purchasing focuses these days? What are they buying, more than anything else? How has it changed? For example, from, Q4 2019 to here we are, closing out Q2 of 2021.
Well, there's been some interesting trends that have gone on in that period. Things have gone up and down. One of the things that sort of held throughout is the focus on health and wellness. So home exercise equipment, personal training, these types of classes, these online education is still really big. But what actually went up and down, or went down and then up, is fashion, which is coming back online right too. So apparel during that lockdown period had a real tough time, and that's understandable. I mean, people weren't going out, so the new outfits and things like that, and weren't nobody's going to want to sort of walk around their house in lockdown, wearing designer outfits. You're going to wear stuff that's comfortable, and you're going to wear it out, basically. So we're seeing that coming back. The fashion houses are now doing more outdoor shows. So that's pretty cool to see. Makeup, cosmetics, still very solid growth there as well. And then the overall, even now that we are back open, like I said, the health and wellness and the fitness of people taking better care of themselves, that's holding true. So that wasn't just a one-off or a blip. We're seeing increases in plant-based foods online, which is something that's pretty new to the market in general. Really sort of talks about a changing consumer base, certainly at the younger ages. Sports, I think electronics have roughly held pretty stable during that whole time. There was definitely a big blip right when people started to work at home. Appliances also had a really big blip online, but these are areas that were kind of forced online as well, because, traditionally they were offline purchases, but when, offline was offline, it forced people to go in and buy online. So people did that. We saw, 400% increases last year about this time online in appliance purchases. So people upgrading their homes now that they're spending more time there. All trends that I think you can probably extrapolate and see in other markets as well. So nothing that was totally unexpected.
What does next year look like for China's economic growth? Okay, so we're seeing a lot of positive headlines, but do you see that on the ground? And if so, which sectors are going to be leading that charge?
Well, I think it's going to be across a lot of sectors. I think there's probably some issues with auto, and that's going to just be, related to these chip shortages that we all have heard about. But outside of that, salaries are rising across the board quite fast. Companies are digitizing, and that's all going to lead to some of the highest GMV growth that's forecasted in recent history. There still is a lot of globalization too. So we're also hearing about big expected numbers in the United States with all the stimulus. Well, a lot of that is going to end up in China as well. So there's going to be increased factory orders. So we're really actually expecting one of the best years in recent history. And I can't really say that that's going to be specific to any one sector. I think it's going to be relatively across the board. We're expecting incomes to rise, disposable income to rise, and just a general overall lift throughout the year. And quite frankly, all throughout the world. This is going to be one of the best years coming out of COVID with this COVID bounce that people are talking about. So it's going to be pretty exciting.
Yeah. There's going to be some economic revenge coming for sure. Let's talk a little bit about the 618 festival. For those who don't know, that is one of the bigger shopping days of the year, probably second only to 11/11 or Singles Day. It's on June 18th. So last year, you were saying that the 618 festival was going to be the single most important consumer purchasing event of the year. Now, with a combined GMV between Tmall and JD of roughly 130 billion USD, it certainly did not disappoint. What are you expecting this year in terms of overall sales numbers for this year's 618 festival?
If you go back, and you were saying that only second to 11/11, but last year, 618 beat 11/11 quite single-handedly, actually. So I believe the total revenue for 11/11 last year combined was closer to something like 50 something like that. But Tmall alone, their 618 was 3 times higher. Now, if you go back through all the historical trends, that's the first time that ever happened. So what was going on, almost like clockwork, was, 618 would beat the previous 11/11, but then the following 11/11 would beat that 618. So they were just piggybacking it and cascading in terms of revenue again and again and again. However, that was broken last year, where the 618 outsold 11/11 by quite a bit. Now, I don't expect that we're going to be doing 132 billion again this year, but I would probably expect that we do beat the 40 billion from 11.11. So I mean, I would say that Tmall is going to be in the, let's say 45 to 48 range would be my guess for this 618. But quite frankly, we don't really know. It's quite a hard thing to predict.
Within that 618 festival, that shopping bonanza, which sectors are we expecting to perform really well, and why?
Well, I think we would expect, I think we can probably expect the growth across them all. It's pretty hard to say that. You can look at that question from a number of different points of view, but I mean, cosmetics do exceptionally well during this time. Nutraceuticals do very well during this time. And I would expect, I think, fashion to make the biggest comeback, because that's what we're seeing. They've probably had the biggest crevice to dig themselves out of. So, I mean, if we're looking at growth rates compared to last year, you're probably going to see some apparel have a pretty good time. But again, caveat that with that they also were one of the most affected from COVID-19.
Let's talk about something I'm actually really interested in, which is live streaming. And I mean, just live commerce, right? Not even live streaming for any kind of influencer uses or anything, but I think live commerce is going to be a super fun space going forward. Is it going to continue to dominate in China in the way that it has in this past year? And, has this really shot well out in front of other go-to-market strategies and tactics? And then, to add one more question to that, why is it so important for brands in market to be a part of this live streaming, live commerce craze?
Well, lots of reasons. One, and we'll just go with the Tmall example here too, is that you're rewarded for it. So if you're broadcasting and you're live at that particular time where somebody is searching for your product, you're going to appear much higher in the algorithm than you would without being broadcasting. So there's this organic effect that live streaming has to draw in traffic that it's almost a must-have now. So if you're not doing it, you're gonna be behind the eight ball for sure. The other thing is that when you look at the search results now, they're great with having the videos up there. So you can actually see the video preview. So what would you rather click on? A static picture or somebody out there talking about the product right now? As with all these tactics, what's always really interesting is that when you are an early adopter, you do get that, first mover advantage. So I think we've been pretty lucky in terms of doing this. But the issue is that now, once you have everybody sort of catching up and playing catch up, the prices for third-party streaming services in terms of who the influencers are extremely steep. And a lot of the audience is really concentrated among, let's say, the top 20 live streamers, with some reasonable outliers in some specific areas like health and fitness, for example. So that's kind of causing a problem. And then the economics of that may or not work for you, depending on what kind of margins that you're dealing with. Like, are you going to be able to give up 30% to your live streamer, plus make sure that you're discounted, that you're giving great offers because the streamers want that? And then doing it yourself and building up your own channels. I mean, that does take definitely a lot of time. And then you have a whole bunch of economics that come into play of, is it a one-off purchase, so that you're, potentially eroding all of your margin on that first purchase, or are using the tactic because you've got something that's maybe a consumable like a vitamin or some type of cosmetic where there's repeat purchases, then maybe the economics look a lot better. So you're building up your database of customers that, you can retarget to and hope to get that margin in the second or third purchase. So in terms of go-to-market, it absolutely makes things easier because you can reach with these third parties, these massive audiences very quickly. You can hit, 6-7 million consumers within your first month of being open, or first couple of months of being open, where that might have taken you 6 months a couple of years ago. So it's definitely changed the game. I wouldn't say that it's saturated now, but it certainly is getting that way that people are flooding into this. What we're probably going to see, and there's a whole bunch of changes that are going on with some IPOs and some anti-monopoly practices, but the third-party platforms like the Douyins, the Chinese TikTok, and the Kuaishous are probably going to be rising a lot faster than they have been so far, because they're going to be able to tap into logistics networks and take more of the e-commerce life cycle in-house, as opposed to just being seen as sort of third-party support systems for your Tmall store. So we're going to watch these trends very carefully. And of course, we always want to be early adopters, making sure that we're getting out ahead of these trends as they come into the market. But that's kind of what we're expecting. And we'll keep you posted on how that evolves throughout the rest of the year.
Yeah, I mean, it is a big thing. It's growing a lot. I don't think it's hit North America that much, but I know it's growing a lot and planning to grow a lot in India as well. And obviously, it's just been there and quite seasoned in China for quite some time now. Let's do a little China looking ahead in a couple other areas while we have you. We have talked before on this podcast with you a little bit about the Alibaba IPO stuff. Okay. And you're one of those rare people who actually reads through the entire documentation when there's an IPO about to happen. And you're often talking to media and Wall Street and discussing the latest moves on the market. One of the things that we keep an eye out for is, this IPO of Baba's two divisions. It's got the logistics division and the Ant Financial, which you pointed out, one was removed from the other last time on the podcast. So if we focus first on the logistics division IPO, why is it so important? And how will that impact consumer behavior and shipping and logistics in the market? And then how does Baba's competitive relationship with JD tie into that?
We're hoping for a couple of things, but I think this is a lot more significant than most people understand. Because once they do IPO, what we're going to expect, and of course they're going to have to do this, is essentially run independently. So one of the things that happens right now, the JD IPO is going to happen very quickly. That's going to basically, I wouldn't say force is the right word, but allow, like they said, the Douyins and the Kuaishous and these emerging platforms that want e-commerce capability to tap into that network. So Tmall Global, for example, has been mandating that you use their logistics services, which is the Sign-Out network, if you want to be on Tmall Global using the bonded trade zones. So that's going to change, and that's going to be a big deal, because what's going on with that right now is, they're very expensive. They do run a monopoly and they can charge whatever they want. But independently, if those are two separate companies, which they will be, once listed and they start to behave like that, then they won't be able to do that anymore. And quite frankly, these other anti-monopoly rules that are coming into play also, the government's been very clear about that they're doing their best to erode these monopolistic practices. We're going to see rises in other platforms, that being the case. So the logistics advantages that were really, that the platforms had, we expect that to go away as these logistics providers IPO and they operate independently now.
For context for the listeners, we are discussing JD's logistics IPO, and it's being discussed right now as well. And by the time this podcast launches, that may have already happened. On the trade front, the trade war, so to speak, we've had roughly 5 months of the Biden administration and their new approach to China. Are you seeing anything in that relationship that is so far significantly different from the previous administration? There was a lot of rhetoric around whether it would, whether it wouldn't, it's going to be status quo, or could be vastly different. So far, what's happened?
Well, I think one of the things that we tune out is what goes on in the media, because there is still a massive amount of trade between the two countries. And that's not going down at all. There's still, incredible demand for products in both markets. And I would expect that trade level to go up in 2021. Whether the government to government relationship is going to improve, I don't know. Maybe not. But, the people to people relationship has always been very strong, and the commercial relationship has always been very strong as well. And there's no sign that is going to be going down. And if anything, we would expect those volumes to significantly rise in 2021.
Amazing to have you on the show. One of the few guests we can get these days that's actually on the ground in China, telling it like it is and giving us some great insight. So always appreciate having you on the show. Thanks again for coming.
Very welcome. Always a pleasure to be on the show as well. Thanks very much for having me.
Growing a company is hard. Doing it in a foreign market? Exponentially so. The best piece of advice I can give you is not to do it alone. When you start looking across the pond for further expansion possibilities, and I sincerely hope that you do, make sure you choose the right partners to do it with. My good friends at WPIC Marketing and Technologies have almost 20 years of experience helping brands, just like yours, enter China. I hope you enjoyed this episode of The Negotiation, and if you're interested in being a guest or want to connect with me or any of our team, please reach out to us at podcast@wpic.co. And be sure to rate, comment, and subscribe wherever you get your podcasts. 再见。